House to Home, brought to you by Remax Diamond Realty.
All right, everybody, it may now be 2015, but we continue with our House to Home segment, and the very lovely Liz and Gina are here. Happy New Year, ladies.
Happy New Year.
All right, so some of the, I would say, dare say, most of the parameters and ramifications of the real estate industry won't change from year to year, even though like we're in a new year right now. But the one thing that people probably should get more familiar with are the taxes that are involved whenever they deal with real estate on a commercial or residential level. And we must say, for purposes of clarification, neither of you, and certainly not me, are tax experts and everything like that. But you do know a little bit about the tax environment relative to real estate. So what are some of the things that people should know?
Well, at the end of the year, it's like collect all your receipts. So I think one of the things, if you purchase a home this year and you want to file it for next year, collect all your expenses associated with that purchase. Likewise, with the sale of a home, all the receipts involving your escrow fees, your commissions, the repairs prior to close of escrow. So all those receipts could be deducted.
Yeah, I was going to say these can be used as direct deductions if you if you're brave enough to try and do the taxes at that level yourself, or you can bring it over to like H&R Block or a preparer.
Have it ready so you have your tax preparer put it together for you because they're the experts.
How about the closing costs and things like that for first-time home buyers? Can they use that as a deduction?
Yeah, yes, actually. And
you can, okay.
Yeah, you can. You know, and that's one of the beautiful things about real estate. Unlike investing in the stock market or other ventures, real estate is one of the few things where if you receive losses during the year, you can actually expense them on your tax returns if you know how to do it yourself, or if you go to a good professional tax preparer. H&R Block is a good example, or if you have a tax person you normally would work with, you bring those documents in, and if you have expenses, you can offset your income with those expenses. And that's one of the beautiful things about owning real estate, is you can actually do that the year that you spent the money. Whereas with other investments, you have to wait until you sell the asset to take advantage of the losses. In real estate, it's not like that.
And that's a really good tip, and I would dare say a lot of people out there don't know that. So everyone, if you're watching this on YouTube right now, rewind about 30 seconds, watch what Gina said again, rewind it again, maybe even 3 or 4 times and everything like that, because that's a huge advantage.
Well, you know, I'm actually shocked at the fact that a lot of people have bought into real estate, and I find when I talk to them later about, you know, the benefits of the ownership, I find out that they didn't really know that they were allowed to deduct these expenses that they paid up front when they bought the property, the upfront, the taxes and the interest they paid up front, and for the seller, the commission that they paid to us. Those items are a tax deduction, and it offsets their current income. So yeah, it's a huge benefit.
So Liz, so as you were just saying a couple moments ago, if I was to, say, buy a house from Gina, right? I bought a property from hers, but I needed to do like a lot of fixing and pre-prep before I moved in. I needed to put a few coats of paint on it, do some work in the yard and everything like that. All of those items could be itemized?
Right. You could collect your receipts, give them to your tax preparer, and then he'll break it down based on how the tax form is set up. I mean, if you're selling, or for example, if you had rental property, here's another thing. If you had rental property and you didn't have a tenant for that year, there was no income. So I mean, or losses, or you rented it for less, and it's worth more. So there's things that you could deduct, have your tax preparer handle, and they would put it in the right categories for you.
And there are benefits, of course, for the renter as well as the landlord.
Well, the difference as a renter is it's not your property.
Right.
You can't declare the interest on the property. So there's no benefit to that as a renter.
Or the purchaser, I should say.
Yeah, but if you're an owner and you've had expenses with that property, you can definitely collect all your receipts and declare the expenses.
You know, the other thing that I want to bring up before we run out of time is, for those individuals who've already had their property for a while, or maybe this is your first year of ownership, in January, right about January, sometime during the month, your bank is going to send you a statement.
That's right.
Mortgage interest statement. When you receive that statement, the purpose for that statement is to show you what you paid in your taxes, the interest that you paid to the bank, and your homeowner's insurance. Those things are itemized in there. If escrow is part of your mortgage payment, those things need to go on your tax returns. That's the very reason that you buy into real estate, so you can take advantage of the tax deduction for the interest you've paid.
And that paperwork should be coming out pretty soon because tax
January.
day is only,
Yeah,
like as we're doing this now, like what, 4 months and
Yeah.
17 days away?
yeah.
And
yeah,
the
exactly.
thing about it is take advantage of us now because Congress keeps trying to change some of these tax laws.
Yeah,
They keep trying to take the mortgage interest away from us.
Can you recommend either of you like a website or maybe a book that people that want to learn like a little bit more about this? Because everybody wants to, of course, like get smarter about taxes and figure out how they can make it work for them.
You would just Google it, say what can I claim on my income tax return.
Okay.
A lot of things, a lot of information is available via Google.
And I love IRS.org.
Yeah.
Go to direct to the source and find
Ask Uncle
out.
Sam.
Yeah, IRS.
I go in there and I look up all the forms. It's all right there.
All right, so ladies and gentlemen, you will be getting the exact same information as the experts do.
Yeah,
And that's the best place
absolutely.
to get it. All right, so thank you very much.
Thank you.
Thank you
Very
for
helpful.
having us.
All right, we'll see you next week. And we will see you, everybody, on the flip